Are we in a recession? Are we in a bear market? What is going on with the watch industry? And why have we been so busy for the last 2 weeks when everything around us is declining?
The UK has fallen into its largest recession on record.
The first thing I want to talk about is the world's economy. This is a massive factor in what goes on in our industry. We have seen a dip in prices. We have seen the prices slowed. One thing I can say is the prices have stabilised. We have seen them levelling out due to many reasons, ones which we'll discuss later. But one of the things I do want to talk about is what's called a bear market. This is something that does happen twice around every 30 years. It's something where the stocks and markets do come down below 20% or more, and it has to be from a prolonged period of between 2 months up to years, in fact. So these things are caused by things like the gas prices going up, the oil prices going up, the war in Ukraine, China being in lockdown. Many reasons cause the stocks and prices to come down. And the one thing I want to talk about is how that affects the watch prices. The watch prices, the Rolex in particular, have stabilised. We have seen a decline since, let's say, March time of the beginning of the year. The prices have now stabilised, and what Rolex have done, which is extremely clever, is put their prices up. So on the 1st of September, which was yesterday, we actually had a price increase of around 4.5% to 5%. Now, why have Rolex done that? Have they done that by chance? No, they've done it because the market, they've seen a dip in prices and demand for the watches over the last 3 or 4 months. The marketing giants at Rolex have decided, how can we combat that? They put the prices up by 5%, and the reason they've been put up by 5% is to level out the market and stabilise it. There's 2 quiet times that we have in our business, and that is around the Easter time and around the summer holidays time. That is notorious within our industry. So the market is slower in that time. And since that's the last sort of 2 weeks, 2.5 weeks, we have been busier than we have been over the last, let's say, 2 months. The price increase from Rolex is fantastic. That does help the industry, and that does reflect on the pre-owned prices. That will help drive up the pre-owned prices as well and create demand and stabilise the market. So all we have to look at is the past 70 years. Just look at the history of Rolex, look at the market, look at how the prices have continued to grow. We are going to have these dips. We are going to have the market slowing down for the reasons that I have just mentioned. But the Rolex trend never stops. It will always continue growing. It will always continue going up. They are the best investment brand ever. We've been selling more of the bigger pieces over the last 2 weeks than we have done in the last couple of months. When I say bigger pieces, I'm talking sort of the 30 to 40k price range. So the bigger pieces, the Daytona Oyster Flexes, the Sky Dwellers, all these bigger models. And why are people buying those? The reason is the savvy buyers out there, the clever people, the ones that understand the market and the trends of the market, they're capitalising on the market prices today. So this particular watch may have been between £45,000 and £50,000 at the beginning of the year. That's now for sale for, let's say, £35,000, £37,000. Let's name an Oyster Flex Daytona, for example. So they see the potential in that because the market dip won't last forever. It can't last forever. Prices do have to start going up again. And they look at where they're going to edge their bets to see if this is the bottom of the market. Am I going to buy at the lowest point of the market? And am I going to capitalise on that market? And that's what they're doing. So the clever people, the ones that we have many clients on our books with high net worth, they have many, watches, they have big collections. They're the ones that are capitalising on the current market. So, the watches you need to be looking out to buy at the moment are the ones that represent great value for money, ones that have, lost that 20, 25, 30%, since the beginning of the year. In saying that, they are still up on last year. So the prices last year, the prices are still up on those prices, but they are more levelled out. So you are in a good position to be able to buy those watches now, rather than waiting and just saying, oh, well, can they come down more? Will it start to go up soon? Let's look at the best time to buy. So the clever people will wait while they're still on the way down, but when the market's levelled, and they will capitalise on that situation. So another thing I get asked, is there going to be a second dip in the market? Is there going to be another drop in prices? We don't have a crystal ball. We'll never know the actual answer, but we can look at the actual track record of the market over the last 12 months. And the one thing that Rolex has helped stabilise the market is the price increase. That 5%, 4.5%, 5% will help stabilise the market. It's extremely clever. They've marketed the brand very well, and we've had more calls in the last sort of 2 days of clients that have realised that, and again, wanting to capitalise on the prices, because a lot of dealers like us, yes, the prices have gone up on the new prices, but the stock we bought at the old prices. So it's only a matter of time before that price will reflect in the pre-owned prices. So anybody out there looking to buy a watch and capitalise on the price increase can still buy at the old prices, but within the next few weeks and few months, they will actually have to pay more because that will start to reflect in the pre-owned prices. So a few models that you need to be looking out for are the hard to get models. So like the Batmans, the Batgirls, the Pepsis, the Oysterflex Daytonas, watches that are not easily available to get, the harder ones to get, not saturated. So ones that aren't, so let's say, for example, you will look at an entry-level model that isn't particularly one of the special edition models. The market will be saturated with that model and they are slow creepers. What we mean by that is they will go up slowly, over month on month, year on year, but they're readily available. They're not really going to lose a lot of money. They're not really going to gain a lot of money. They're good investments and they're nice watches, but they are going to go up slowly. The ones you need to be looking out for, the ones where they are the harder to get watches. There's many dealers out there at the minute that are selling them at extremely cheap prices, in the current market, which we feel are probably a little bit too cheap, but there are some good deals to be had out there. But just look for the harder to get watches, look for the ones that there's not as many of them for sale on the market. You are getting them at an unbelievable price at the minute. This will not last forever. They will start to go up again. We feel by the end of the year they are going to start going up again in price. So I would honestly capitalise on it at the moment and just do your homework. As long as the dealer's a trusted dealer, a proper company, that you're getting an exact watch of what you're actually buying, and they're selling you the same watch, then you're absolutely fine. So what shouldn't you be buying? What watches should you be avoiding? What watches are there still some, let's say, downturn on the actual value? The really big pieces, so your big Pateks, your big APs, your really big Rolexes, the Platinum Daytona. When I say you shouldn't be buying, if you're getting a good price on that and the market price is extremely competitive, yes, buy that watch. But some dealers are still selling at the old prices. So what I mean by that is the prices they bought, on the previous when they were on the up. So you've got to make sure that, you are buying at the new prices. Where everything we're getting at the new prices now, that we're buying in at the new and selling at the new, we're selling straight away. So the market is there. The market is strong. People are capitalising. But the bigger, really, really big pieces, some of them I still feel have a little way to go. If you can get a good deal on one of those, absolutely go for it. But just be mindful of the actual current market price and the old prices, because online you will see there are quite a varied range of prices on some of the watches, especially the bigger pieces, and they're still the old prices because obviously the dealer doesn't want to make a loss, and I understand that. And they're trying to deal their way out of it and still trying to recoup, most of their money or not really take a loss or a small loss. But the bigger pieces, if you can buy them now at the new market prices, you should be buying. To give you an example of that, we just sold a Platinum Daytona that we had in stock. I think we've had it in sort of a couple of weeks, and we've just sold it for £95,000. The list price on that watch is around £65,000 with the recent price increase. And that particular watch at the beginning of the year, sort of February, March time 2022, that particular watch went up to £150,000 for the plain dial Platinum Daytona. So that under £100,000 is unbelievable value, and that is actually last year's prices. So we're not going to go past last year's prices. We're not going to recede past last year's prices. All prices have stayed around that and slightly more, so hence the market being strong. But if you can buy something like that literally was another 50% more in value, that is a good buy, because they will just level out and then they'll just start to go up again. So that's what I mean by big pieces, good value, anything that shows that sort of decline and return and price is a very good buy. So that's what you should be looking for. So my advice is, even if you do not have funds in place to buy a new watch or capitalize on the market, my advice would be to, if you've got a watch, part exchange it, trade up, trade down. If you can put yourself in a position where you can capitalize on the current market, maybe you bought your watch last year, the year before, you bought it at a good price, you've had a nice return, that you've had the pleasure out of wearing it, you've fancied another watch, sell that watch, part exchange it against a new one, capitalize on the low prices that they are now. You've obviously made a nice return on your part exchange, and then you can go again. So you don't actually have to have the funds in place. You might be able to, you've been looking at this watch for the last few months, maybe 6 months. So definitely capitalize on the market, look at what's out there, choose your dealer, make sure they are a proper company, get a good price for your watch, get a fair market price, hopefully that'll give you a nice return, and then put yourself into something new that you've obviously desired and an amazing low price, because you will reap the benefits in the next 12 months.